Hello, everyone, and cheers. It's a good day for this lovely Paulaner grapefruit radler. This is really good. If you guys want a good fruity but not too cidery beer, it's really good. But you know, seems like a good fit for the day. I don't know why, considering the important thing that's happening right now is oil prices are going to go up again. Good timing, as always, right when we're all starting to feel a little bit of relief from gas prices exploding over the last year. Seems like they're going to go up again, which is always fun. And I every time gas prices go up, you see a lot of people pointing fingers and trying to figure out who to blame for it. When in reality, the people who have caused this mess are, of course, the voters who constantly misunderstand the relationship between what they want from the government and how they vote. And when shit hits the fan, they all of a sudden want the government that they voted for to do something that they didn't vote the people into office to do. It never made sense to me. It has never made sense ever since I even started to get a slight handle on how gas prices are maintained and how they are written for the wider economy. Pardon me. Okay, there it goes. Sorry, technical difficulties. Anyway, boy, this one's getting off to a slow start. Thought I'd have my shrimp together a little better than this one today. Anyway, so oil prices are on the rise again because OPEC, the Organization of Petroleum Exporting Countries, which is headed by Saudi Arabia and Russia, have decided to cut oil production. And oil production being cut during a time when oil demand has not dropped equals higher prices. And this will have two effects, not benefits. Well, it depends on if you like selling and trading oil. So I have two effects. One, it will help prop up Russia's war effort in Ukraine because if oil prices go up from cut production, then Russia will make more money if Russia doesn't cut production. So if the petroleum exporting countries all agree to drop production by a certain amount, but Russia keeps selling the same amount, then the global market will push the prices up, even though Russia is selling the same amount of oil, and bam, they made a bunch more money. And that they can then put towards, guess what? The Ukraine war. So yeah, not a particularly good situation there. And then the other countries, Saudi Arabia in particular, has stated that they want to raise prices because, let's see here. I gotta find it here. At a news conference after the meeting, the Saudi energy minister, Prince Abdulaziz bin Salman, Abdulaziz, I had a foreign exchange student as a roommate in college whose name was Abdulaziz. I never saw it spelled. I only knew it was Abdulaziz. This is the first time I'm actually seeing that name spelled out. Yeah, he was where is he from? Shoot. Was it Saudi Arabia? I think it was. I think it was a Saudi Arabian foreign exchange student. Anyway, side note. Prince Abdulaziz bin Salman said OPEC Plus was acting amid signs of a downturn in the world economy that might cause demand for oil to weaken and prices to fall. So, What they're doing is they're trying to increase the price of oil now and make a bunch of extra money now, so that way if demand for oil falls like it did during COVID, they won't lose their ass again when demand falls. Although COVID was extreme, so barring another pandemic starting up that we have no control over, prices will not fall like they did under COVID. So anyway, that's their justification. Russia wants to do it because they want to fund their Ukrainian war, and Saudi Arabia wants to do it because they want to make more money. Yay, capitalism. So they're going to screw all the rest of us, essentially. They're going to push the price of gasoline up even higher and the price of oil up even higher just so they can pad their pocketbooks. Just so they can make a little bit more money. Screw the rest of us, Billions and billions and billions of dollars worth of oil is traded on the market every day, and these people want to siphon a couple more billion off the top because $1 billion is not enough, apparently. The move appeared to have the desired result. The price of Brent crude, the international benchmark, which has slumped during the summer, rose more than 1.5% after the meeting, extending the gains recorded in recent days and bringing prices back to the levels last seen in mid-September. So, in mid-September, if everybody remembers, the price of a gallon of gasoline was high, but it wasn't August high. August and July, it was pretty bad, if you remember. I forget when it hit its peak. I think it was a little before that, but regardless, July and August, it was rough. And it's steadily dropped since then. So now the price of a barrel of oil has gone up to what it was 3 weeks ago, basically. And if you've noticed, I have, that gas prices have started to creep back up. In my area, they're up about 25 cents, I've noticed. So we were hanging right around 350. We're right around 350, 355, and now we're around 380. I think 375, 380 a gallon. So that's cool. In response to the OPEC Plus announcement, the Biden administration officials said the president would order the Energy Department to release 10 million additional barrels of oil from the Strategic Petroleum Reserve in November. Earlier this week, the administration said it had no plans to extend a 6-month effort to release 1 million barrels a day, which was scheduled to finish the end of this month. So, America has been releasing 1 million barrels of oil a day to try to increase the supply on the market and drop the price of oil. They had plans, and still do at the moment, to stop releasing the 1 million barrels of oil a day at the end of October. Given this change in strategy from OPEC, the Biden administration will probably change course, whether they'll commit to releasing 1 billion or 1 million barrels a day for an extended period of time after the end of this month. We don't know yet. They'll probably do something. They've committed to releasing 10 million additional barrels to try to stabilize this thing. But if they're going to continue doing the 1 million barrels a day long term has yet to be seen. But given that releasing barrels of oil is the only lever on the gas pedal that the president has to try to somehow to slightly control gas prices in the United States, they'll probably do something. So, speaking of what the president can do about gas prices, brings us nicely to the whole point of me talking about this. Voters have caused this problem. It's frustrating as all balls because I know people, many people in my life particularly, that seem to have this skewed idea of wanting the government to simultaneously keep their hands off the market. All these people that I'm talking about tend to be Republicans, or at the very least center-left liberals. But mostly Republicans. And the Republicans that I know in my life are constantly like, I don't want the government mucking around in my life. The government screws things up. Look at how awful Social Security is, and Medicare, and our roads are falling apart, and all this other stuff. And granted, those things are true. I'm not saying those things are not true. But the minute something goes wrong that a government entity could in theory get a handle on if the people in that were voted into office had the political inclinations to do something about it. um, all of a sudden the all the Republicans in my life are now suddenly blaming the government for not doing anything when they voted people into government that they like specifically to not do anything. And this is what's so frustrating about it is the president does not have very much control over the price of a barrel of oil. They just don't. Whoever's in office just does not have that much power over it. Like you can try to tweak things around the edges by like releasing barrels of oil from the emergency reserve in the United States, or you can try to like maintain a perfectly ridiculously stable economic situation so that way gas prices will stabilize. Potentially OPEC will start releasing more barrels of oil to drop the price to try to encourage people to go out more, to buy more things, to ship more goods, because the price of a barrel of oil makes all of this stuff fluctuate to different degrees. So if you have a very stable system, a very stable economic um, uh, um, atmosphere at the time that the president is in office, and the president tries everything that he possibly can to keep it as stable as possible, then that can also produce lower gas prices over the long term. Because with the stability comes predictability, and with predictability uh, comes like ease of economic activity. And one of the things that happens with ease of economic activity is everybody wants to produce more things, and if they want to produce more things, they have to be able to do it at reasonable prices. And oil is a huge part of the cost of producing things. So it creates this incentive for petroleum producing countries to potentially lower the price to try to spur more use of oil so they can make more money. But in the current situation that we have now, where it's unstable, everything is constantly changing all the time between COVID and China constantly shutting down cities because of COVID, and all the climate change problems that we're having, and the Ukrainian war, and all of the sanctions that the European Union is putting on Russia, and now North Korea is launching missiles over Japan. It's like with all this stuff happening all at once, it's an unstable situation. So the only way for oil companies to make more money, since economic activity will not be spurred by cheaper prices to the same degree that it would in a stable economy, is to raise prices, because there is a minimum amount of oil that people will use in general. Like regardless of what the price of a barrel of oil is, you still have to go to work. You still have to get kids to school. You still have to get goods transported around. And, there is a minimum of that. There is a reasonable minimum of that stuff that you will hit. So if you keep raising prices, even if the economic activity is at its reasonable minimum, now things get really bad, obviously it can drop further, like during COVID. But under normal-ish circumstances, there is a floor to how much oil the world will buy. And if you cut production, it'll raise prices, because you're at the minimum. Like it's not going any lower. And so all of these things happen independent of what the president does. And the reason it happens independent of what the president does is because the system is specifically designed. The oil price setting system is specifically designed to work independently of what the hell the government wants, because it's commodified. And commodified, just like in layman's terms, just means that the supply of oil, or oranges, or housing, or real estate in general, actually, but or anything that's bought and traded on the commodities market, cryptocurrency, gold, silver, those are a lesser extent because they're like a hard good that has like a generally fairly consistent perceived value, but still commodity. And all of these things are stocks and companies are basically bet on by people who want to make money off of it. So in oil, it works on futures contracts, and what happens is some of the oil that is produced is set aside for what are called futures contracts. And what futures contracts are is oil companies don't want to be caught with their pants down if they have a bunch of oil that they can't sell. So what they do is they will guarantee to sell oil at a price in the future if you guarantee to buy oil at that price in the future. So usually what happens is the oil companies will agree to sell people who want futures contracts. This is what happens on the stock market. They will agree to sell people who want futures contracts oil at a slightly lower price than if you were to just buy a barrel of oil right now. And so there are two prices in the oil market. There's the spot buy oil price, where if you just buy a barrel of oil right this second, that's the price you're going to pay. And then there's the futures contract price. The futures contract price usually is lower than the price of a spot buy barrel of oil, and that's where the money gets made. Because if you buy a barrel of oil, or if you say you're going to buy a barrel of oil in 2 weeks for $98, and then in 2 weeks the price of a barrel of oil is actually $110 a barrel, then you get your barrel of oil in 2 weeks at $95 a barrel, and then you immediately sell it for $110. And you made $30, or what is that? You made $15 on the deal. What is math? So that's how futures contracts normally work. And the benefit to the oil company, even though they made less money, was if the market crashed and some huge cataclysmic thing happened, like COVID comes along, then all the people who have futures contracts are locked into buying it at $95 a barrel. They speculated, they bet that if they bought it in 2 weeks at $95 a barrel, they could sell it for more than they paid for it. And the benefit to the oil company is if the price tanks, they now have some of their oil, not all of it, because they're selling some of it at the spot buy price, but they have some of their oil that is guaranteed to be bought by contract. So they're not just set losing all. They have a few million barrels of oil sitting in tanks somewhere that they have to sell for a loss. They've already locked in the price of some of that oil, so it smooths out the ups and downs of the oil price for the oil companies. So the benefit of this system is the oil companies sort of get a smoother profit trajectory. They don't have these huge spikes up and down, or not as bad as it would be without the futures contracts. And people with a lot of money who want to buy the futures contracts can bet on the price of the futures contract. Now, the problem comes in that if you're betting on the price of something, you're expecting it to go up, then you expect the expectation of profit is what drives the buying of the futures contracts. So if you think you're going to make money, you'll buy futures contracts. If you don't think you're going to make money, you won't buy the futures contracts. And this is where the flaw in the logic of the president controls the oil prices comes from. That the president even can really do all that much about oil prices. This is where that flaw in the logic comes from. It's so if you don't think you're going to make money, you won't buy the futures contracts. And if you won't buy the futures contracts, then the spot price of oil must come down to a point where people will be comfortable buying the oil. And the futures contracts must drop to the point where people will buy or will be willing to pay that for the oil. And as a result of this, because it's all about expectation, yes, there is a component of supply, there is a component of demand, but ultimately supply and demand are just factors on the spreadsheet that add up to the expectation that investors have for what the price of oil is going to do. Because the expectation is what matters, you can manipulate the stock price, the commodity price of oil, by just threatening to do things. So the OPEC countries know this. So here they're trying to raise the price of oil. Now they're threatening to cut production by 2 million barrels a day. So that's about 2% of global oil production. Now, that 2% cut in oil production in one day resulted in a 1.5% increase in the price of oil. So if that 1.5% increase keeps going, the expectation that the price of oil is going to go up keeps going, then even if they didn't cut production, just threatening to do it, because the 2 million barrels a day haven't been cut yet. They've just said they're going to cut it. So there's no change in the supply of oil at this point in time, at this singular moment. Right now, the same supply of oil on the market is out there as it was before they announced it. But just because they announced it, investors expect the price of oil to go up, so they act like it's going to go up, and the price goes up 1.5%. Now, it just so happens that this expectation of it going up may literally only be an expectation, because I got to find it here. Let's see. Hold on. Wednesdays, headquarters. It says, but there's uncertainty about how deep the cut in oil production will go. Because of a lack of investment, most members of OPEC Plus regularly fall short of their production quotas and will not need to trim production much, if at all. What this means here is that OPEC, the countries that have been producing the oil, have said they're producing X amount of barrels of oil, but they haven't been investing in the infrastructure to actually produce that oil. So the entire market is propped up on the numbers that the OPEC countries are saying they're making. So at this point, they're saying they're going to cut oil production by 2 million barrels a day, but they haven't even been meeting their targets. So they may actually, saying they're going to cut it by 2 million barrels a day, it might not even change the supply of oil, because at any given time they may already be coming in 2 million barrels of oil short of what they're already making. So this right here is a good example of how the price of oil is almost entirely dictated by the feelings of the investors, the feelings of the rich people that are buying the futures contracts in oil for the future. And it shows how just by having that commodification, having that ability to buy and sell oil on the stock market, creates a situation where we all, the normal people, are essentially held hostage by the oil producing countries by exploiting the feelings of the rich people that are buying the oil. Now, why does the president have no control over this? Because basically what's happening here is the free market has decided that they're going to buy and sell oil in a way that isn't reflective of the actual supply and demand side, the actual economics of what's going on with oil. Do the actual economics of oil, like the physical production and use of oil, have something to do with the price? Of course they do. Of course they do. But it's not the main driving factor. It's the expectation that drives it. The supply of oil and the demand for oil sort of like creates the overall trend, like the very macro sort of lines that happens in oil, but all the little bounces, all the spikes, all the huge swings in oil that may happen from one month to another month that comes along, all of that happens because of investor expectation. And investor expectation can be used as an excuse for oil companies to actually cut production. So they can be like, we're going to cut production. Prices go up. Oil companies are like, well, since we're cutting production, we're going to have to raise prices. So then they raise prices and they cut production even more to justify the raising of the price. Like it's a whole thing. So anyway, Because this happens on the stock market, and the stock market is for all intents and purposes a free for all over the world of just rich people just shooting money cannons at each other and hoping that that the money cannon of other people gets pointed at them a little harder than their money cannon gets pointed at other people. Because that's essentially what's happening, and it's really really unregulated as far as like limitations. There are a lot of regulations on stock trades and commodity trades and stuff to try to um, prevent scamming the markets. So like when Elon Musk decided that he was gonna say he was gonna take Tesla private for like some number of shares that he never actually intended to buy, and the SEC was like, you can't do that. Like, you're manipulating the stock unfairly, because it was essentially a made up number that he just threw out there. He was like, I'm trying to spike the stock price of Tesla, so I'm going to say I'm going to take it private at this number. And that spiked the stock price of Tesla because a bunch of people thought they were going to make a bunch of money on selling their stock to Elon Musk. And he got in trouble for that. He actually got, I forget what his position was, CEO or something. He actually had to step down from that position to a different job because the SEC fined him for it. So there are regulations for stuff like that, but there are no regulations for supply side stuff. So like if a bunch of orange farms just decide they're going to burn all their crops down to try to raise the price of orange juice, there are no SEC rules and regulations that to tell them they can't do that. And just like there's no SEC regulations to which the SEC, granted the SEC is an American thing, so it wouldn't even apply to international countries, but still, there's no regulations. There's no like consequences for oil producing countries basically gaming the market to make their own money. And there are no regulations because the people who have been in charge in the world, in the United States, for a very long time have all been capitalists. They've all agreed that the accumulation and the accumulation of capital and resources in the hands of rich people and in the hands of the free market will always produce results that are better than the alternative. But the commodification of like I call them base goods. Like, I don't know if I don't think that term has like a actual academic like meaning, but for me that's what I think of them as, is like base good, like the basic goods of an economy. So energy in our case it's oil, like almost exclusively it's oil. Like that's how oil is traded on the commodities market. You can't really trade wind farms on the commodities market. So it's oil. That's what it is. And then housing is commodified. People get to gamble on the price of houses all the time. It's the reason why the house prices are so astronomically high right now. If you weren't allowed to just buy a house as an investment, and instead you had to buy a house as a place to live, or you had to buy a house, or you had to buy, or if you wanted to buy a property to rent it, for example, if it was required to have more than one unit in it, so that way only families who wanted to own a single family home could own a single family home, then the decommodification of that system would produce significantly cheaper houses because rich people would no longer be buying up the supply to raise the price of the houses that they already own, so they can sell them for a profit to then buy more houses to raise the price of the houses that they bought to raise the price of the first house that they bought, and then the cycle just keeps going until nobody can afford to buy a freaking house anymore and the whole thing collapses, which is basically what's happening now to an extent. So commodification ruins these otherwise extremely important systems and makes them rife for exploitation from anybody who wants to try to invest in it. And the people who control The investment prices are the people who have a lot of money to buy a lot of units of whatever the commodity is. And the people who have a lot of money are, of course, the rich people, the people who accumulate the capital in the system. So this infatuation that all our politicians have had for years with the accumulation of capital has produced this has produced a system where the government essentially doesn't have the power to control the situation. The president can't do anything. What's he gonna do? Is he gonna fine people for buying and selling assets on the stock market? They do that all the time. Is he going to force all of the oil companies in the United States that are producing oil in the United States to sell the oil at price in the United States? Well, they'll just sell it to the international market. They don't have to sell it here in the U.S. They'll just sell it to countries in Africa. The African countries will happily take American oil if the government here in America wants to induce some kind of price cap. Is the president going to force the OPEC countries that all conspire together to help drive these market forces? Are you going to accuse them of being a monopoly and then invade the countries to force them to do it? No, the only thing the president can do is work around the margins. And it's because the voters who keep voting for Republicans and standard issue liberals will constantly vote in people that when everything is going fine and swimmingly, they deliberately set up systems where the government doesn't have control over stuff. And then when things fall apart and the government needs to exert some control over stuff, there's no legal avenue to do it. But then the people who voted in the people who removed the legal avenues for the government to do anything are then upset that the government doesn't do anything. And it's there's only so much the system can do. There's only so much the system can handle. And there needs to be a change. And it's not going to happen because you vote in some president. The president literally does not have the authority to do this. What it would require to solve this problem is the decommodification of the oil supply. And the only way to decommodify the oil supply is to remove the oil supply from the market. Because it's the market forces that fuck it up. It's the ability of people to buy and sell oil with the expectation of making money off of it that keep driving the costs. Whereas if it was decommodified and the government just controlled the oil supply completely, which granted, in order for this to be effective, would require a lot of other changes. I'm not saying that the current makeup of the U.S. government should have 100% control of the oil supply. You would need to change a lot of things about the government to do this. But if those changes were implemented ahead of time and the government controlled the oil supply, then you can leverage the fact that the government has the ability to absorb almost endless losses to level out the cost of commodified goods. If it costs $100 to produce a barrel of oil, but all of us are used to paying, at the gas pump, what the equivalent of $75 a barrel is, when times are bad, when oil production is low, the government could just sell it at a loss because it's the government. The government loses money all the time on stuff. They spend money constantly with no expectation of getting a return on it financially. They do it with the expectation the government spends that money with the expectation that it's going to spur economic growth or it's going to keep economic growth happening. Well, what would keep economic growth happening more than stabilizing the freaking oil prices? But if we do that, rich people can't make money off of it. You see where this goes? If you give rich people control over the price of something by letting them invest in it, then they're just going to do what makes sense for their pocketbook. I don't even think the people that invest in the oil the oil market are like fundamentally bad people. I think they're flawed people. I think they've got like this brain rot that has happened from them being exposed to people who all do the same thing. Or they've heard people talk about how good it is to like invest in these things on the stock market, try to make some money off of it. And, you know, the act of making money to them is like inherently good, even though their participation in this commodified oil system is fucking Joe Schmo living in friggin', you know, Boise, Idaho, who owns a truck that, you know, he occasionally uses to haul around some equipment to mow the lawn at some local neighbor's house. He doesn't really make enough money off of owning that off of his lawns to pay for that truck, but you know, he does it on the side. It's a nice thing he does for some friends and family and stuff, and he makes a little money off of it. And now gas prices spike, and you know, he's even more in the hole. And these rich people aren't buying and selling these futures contracts in oil, or you know, the futures for lumber. Remember when lumber got real expensive? Same fucking thing happened because lumber is commodified. So they're not doing it, you know, thinking, oh, I'm over here getting one over on everybody else and I'm screwing everybody. They just have some money that they're trying to make some money with because capital begets more capital in a capitalistic system. And so a good way for them to do it in a lot of situations is to buy some futures contracts for oil. Like that's as far as the thought goes. So it's not their fault inherently that this happens. It's the fault falls upon the voters who will not demand that this system is changed. That the best interests of all the people who don't own futures contracts are put first. Whereas right now, it's the people who own the futures contracts and the suppliers of the oil that are thought of first. Even though without us buying the oil, they have no market. And it's just fucked up. And I get more like I don't voter shame people for voting for like voting for one person over another person, even if I think they're wrong, or if they abstain from voting because they think they're being screwed by the people in power. I don't voter shame on that stuff. And I'm not trying to voter shame right now on principle. What I am trying to do is to get people to understand that what you're expecting with the price of oil and what you're expecting the president to do with the price of oil is exactly counterpoint to how you vote. So that's what I'm criticizing, is that contradiction. That screwed up message in people's brains that they keep repeating. I hear it all the time. I've heard it from family members of mine where they're like, I really want the government to stay out of my life. But they're also blaming Joe Biden for prices being high. And they're giving Trump credit for when prices are low, even though Trump didn't have any effect on the prices being low and Biden didn't have any effect on the prices being high. And the reason they didn't have any effect on the price of oil, their respective price of oil while they were in office, is exactly because the people who those same people, the people in my family and other ones that I've talked to, they got what they wanted with their vote. They wanted the government to stay out of stuff. And so they voted for people that would keep the government out. And now when the government's out, they're pissed off because shit gets bad. Like it's beyond frustrating. And I hope that somebody sees this video, because I'm, you know, partially doing this because I like getting thoughts off my brain, but I'm also doing it because I hope I can explain some things in a way that makes sense to some people who may have otherwise not heard a good explanation. Because I know nobody I talk to with any regularity has even like heard of futures contracts for oil or why they exist or what's the consequence of them existing now. Like I don't know a single person in person. I know a couple of people that I've talked to online that understand this stuff, but like in person, face to face, I haven't met a single person that knows what futures contract is. But they all expect that things are going to change. But they're not. I don't know. It's frustrating. So I hope that somebody who maybe have never heard this catches this video and sees it. You know, it's just I don't know. I don't know. I have no idea. You can tell this is one of the things that really gets my goat. People having like really strong opinions about people having really strong opinions about something that they're just totally uninformed about what their actions are causing. You know, and this happens a lot with a lot of different things, but you know, this one in particular, the gas prices, is so present and so sentient in or so sorry, not sentient, central, is so present, so central to people's lives that like the minute it starts to shift, all of a sudden all these opinions come out, just out of the woodwork, and the opinions are almost never properly informed, or at least informed enough that they understand the relationship between the way that they vote and the outcome of that vote. And it's just frustrating, you know. I think I've said it's frustrating enough, so I'm going to get off of here because, you know, my voice hurts. It was one of those days where I talked too much. So this one's short, 41, only 41 minutes, but hey, only I am watching my own stream at the moment. So, whatever. See you later.